I think people, with the run up to Christmas at the moment, start to think, "Oh, I'll worry about it later. We don't need to worry about it. The world's going to wind down. We'll deal with it next year." And that's not what we're seeing at the moment at all. If people are ignoring their tax debt.
Yeah, I think that's right. And look, we'll talk about it in a little while, but we've seen a lot more businesses coming to us with statements of claim, statutory demands, and so forth. And so there's no question that the ATO are moving more quickly on this, but they're also moving more quickly to, I guess, what we call the really serious enforcement action. You've got your four horsemen of the apocalypse with your director penalty notices, your garnishee notices, your credit reporting. But the ultimate thing for, at least for a business and an individual, is when they get sued in the courts for either to wind the company up or a statement of claim. And I think you're right. There is that tendency, and we have to pick up the pieces in the new year for businesses to go, "Oh, it's Christmas time, it's summer, summer in Melbourne as well." And I get it. I get it. It's been a long year. People want to have a break. But this is the worst time to be ignoring your ATO obligations if you have debt.
Yeah, absolutely. So a perfect example of that is I spoke to a hairdresser that had a couple of different salons about 6 months ago, and explained to them we could probably get them a 3-year arrangement. They wouldn't need any upfront payment. Their debt wasn't overly high. It was sort of sitting at around the 200,000 mark, which is a lot of money, but not in the extraordinary range like we often see. They decided not to proceed with our help. They were just going to see what happened with the ATO. They'd had a couple of different recovery actions against them. Fast forward, and the ATO actually issued a statutory demand against them. And so because they ignored it, and they'd ignored all of that recovery action, when they then came back to us and said, "We've now got this from the ATO," which, as we know, is the first step in winding that business up, the outcome that we could achieve for them was very different. You no longer can get the 3 years. We can absolutely still stop them being wound up, but it's a much shorter and tighter time frame for that payment plan than they would have otherwise had, and an upfront payment was needed as well.
Yeah, it's funny, isn't it? It's almost like seeing that 6 month period before was that last window that they
Yeah.
had that option. And and it's similar. We've had, I think, even just in the last 2 weeks, we would have had at least half a dozen businesses that have come to us, and some of them have been sole traders, and some of them have been companies in some form of either stat demand or if it's a statement of claim. We had a broker came to us last week, and similarly, and the shame about it is that she's got very strong cash flow and could actually pay off a long-term payment plan on her ear, but again, ignored it, and then finally decided it was time to do something when a statement of claim was served on the business. And again, as you say, something we could have got a long-term payment plan for is now looking at a much shorter term. Now, she's lucky because she has capacity to pay it, but now the ATO were requiring a significant upfront, which we wouldn't have needed even 2 months ago or a month ago before the statement of claim was served. And now she's having to look at raising finance to raise that lump sum, which could have been totally avoided. But look, the good outcome, or the good, I guess, result is that at the end of it, we will get her into a payment plan, and we will get her out the other side. We'll be able to look at the interest, but it's a much more stressful, I guess, experience than it might have otherwise been. And certainly, as you say, the parameters have come down quite significantly.
Yeah, much more onerous. I think that's also another big shift we've seen in probably the last 2 months. Is there's a lot of people that will have received a director penalty notice, which is making them personally liable for the company's debt, that have ignored that. And the big shift, I think, as I said, especially in the last 2 months, is that they're now getting proceedings issued against them personally. Not necessarily huge debt. I think a lot of people think that if they're under the 500 or under the million, then they won't have further recovery action. But we're seeing a lot of statement of claims, which mean the ATO are suing that individually, personally, for the company's debt, because they've ignored all the other recovery action. They're now personally responsible. They now need to deal with it, and the arrangements that we can get are so much more onerous than if we dealt with it when they'd first received the director penalty notice, or when the company had first had that debt. I think the biggest message that I've been saying, and I'm sure you are, where everywhere we go, is we can deal with these. I know it's embarrassing. I know that it's stressful, but the earlier you deal with it, the earlier you talk to someone, the better arrangement we can get. And the difference in a week, but whether a court proceeding has been issued or a court proceeding hasn't been issued, the financial consequence is just huge.
Yeah, it's funny. I spoke to a business this morning. It's a construction company, and they've been caught up in a long-running piece of litigation against the head contractor, who unfortunately is a much bigger company, and we believe are trying to starve them out. They've now got judgment, and they're trying to enforce it. We're lucky we've still caught it at that point before, but he's had credit reporting. He put in a payment arrangement proposal. They did it all themselves, which unfortunately wasn't capable of being accepted by the ATO. It just didn't fit the parameters. That's been refused, and then 2 days later he got lockdown director penalty notices for $250,000. So it came to us via a liquidator who looked at it and said, well, there's no point us liquidating the company because you're on the hook. But the good news is we've caught it before it's hit this point. And so I've said to him, look, we need to move really, really quickly on this matter, because right now a long-term payment plan is still on the table. But if we leave this and next week he gets served with a statutory demand, it's no longer on the table. And it's that recurring theme we say is that, and the statistic I always say is that around about 97% of the businesses that we see, we fix. And the 3% are the ones that just really have no capacity and no ability to do it. But you need to engage quickly, and you need to engage properly. And the quickly thing is really, really important. But similarly, this was also an example of they didn't engage properly. They put something to the ATO that didn't comply with the legal practice statement. You and I both know those back the front. And we often see this where they say, we've been dealing with the ATO, we've put these offers in. On their face, they kind of look reasonable, but they just don't meet all the requirements. And, you've heard me say this many times, computer says no. So luckily, they've got to us in time, and the liquidator said, no, we don't need to kill this company. Tax Assure can fix it, but we're in time, and that's great.
I think another question we get asked a lot, which you sort of touched on, is that different legal proceedings have timeframes. So a statutory demand, you've got 21 days, and a director penalty notice. I get asked a lot whether there is a time frame between the ATO potentially issuing credit reporting and then when they'll go to the next step, or what that next step might be. But it's really important to know there is no legal parameters, and there are no laws or rules around when if credit reporting has been issued, when a directed penalty notice might be issued, or when a garnishee notice might be issued, or when a statutory demand might be issued. The blanket rule is if you are not in a payment plan and you have an outstanding debt, you are at risk of any raft of that enforcement action. And one thing that I think has significantly changed this year compared to other years is by making voluntary payments. So sometimes I hear a lot of clients say to me, oh, but I've been drip feeding, I've been paying the ATO every week, there won't be anything further. That is no longer a form of protection either. Without that agreed payment plan, even if I often see clients that have been paying voluntary payments which are more than what we would ever agree to on a payment plan.
I've seen those.
So they're paying huge amounts to the ATO in a voluntary capacity, but they haven't got a compliant payment arrangement, and then enforcement action has been taken against them, whether it's credit reporting, whether it's the statutory demands, which puts them so far behind the eight ball. So I think that's sort of a misconception at the moment, which has really changed in the last 12 months.
Yeah, look, I think you're right. I mean, under the Act, as you know, the ATO require what they call active engagement. And I think this is where a lot of businesses, and particularly a lot of the accountants I'm talking to, are getting caught out, because they're saying that we're making voluntary payments, we're talking to the ATO. Even some of them are saying we've lodged an application with the ATO, and then out of the blue, when it's not really out of the blue, but out of the blue, something nasty happens. And an active engagement under the Act is none of those things. It's been an enforceable payment plan. So this is kind of what we're sort of saying. And it's particularly frustrating if they've got an application with the ATO. This is a classic example where they put the application in, but the ATO couldn't accept it. So they may as well have nothing in with the ATO. So the ATO just went straight away, no, oh, by the way, and here's a whole bunch of director penalty notices. So, and we often see that, no, and here's the statutory demand. So it's really, really important to understand that, because one of the things we hear quite regularly from particularly our accounting referrers is the ATO are getting a lot tougher. There's no question they are getting tougher. But I think a lot of the difference is actually not so much what the ATO are doing, but requiring that strict compliance with those legal practice statements. And, in the old days weren't that long ago, people used to say, we just put a story into the portal and we would get an outcome. But now the ATO is coming back and saying, no, we can't accept this and we need this, this and this. Well, those are the things that we've been providing to the ATO for 12 years in compliance with the legal practice statements and so forth. So it's becoming much more specialised to do this work. It's not just a case of, well, we'll contact the ATO, we'll tell them what's been going on, we'll put a story to them, and we'll put something that sounds reasonable. The case officers have been told, no, you need to have all this information, you need to do all of this, and if you don't, coming back to before, computer says no.
Yeah, absolutely. And I think COVID feels like a lifetime ago, but I think some of the things that happened in COVID, like the easy applications or the easy remission wins, people have felt like that's the norm. But from our experience, what we're actually seeing now and what the ATO is requiring now is exactly what you said. It's the legal backup, it's the guidelines, it's whatever in the legal practice statement, which is what we've always put into applications and what the ATO have always required. It was a bit like a bump in the road, a bit like a hiatus, which I suppose it's one good thing potentially that came out of that terrible COVID period, but it's not normal. It's not real, and it was never going to stay.
No, and you made a really, really, I think, important point earlier, which I want to pick up on because I think, and it's around the time around all of this. We've been doing this for a long time, and when people would ask me, I would say, look, the time frame you have from maybe a nasty letter or a threat that one of those red letters to the really nasty stuff happening is sort of 12 to 18 months. You're right, there is no time frame, and that was just kind of how long it took. One of the things that has changed within the ATO is and this is probably what's been perceived as aggression. And look, there is no doubt that they tightened some of their parameters, but it's the speed that they're acting. And now I've had a number of cases where they've gone from warning letter to credit reporting, DPN, garnishee, and that's roughly the order they seem to be
And then
happening
stat
to
demand.
stat demand, and that's in 6 to 8 weeks.
Yep,
And
absolutely.
that's the thing. So you cannot, I always say to people, it's a really hard time to owe money to the ATO, but it's also the worst time to ignore it.
Yeah.
Because getting back to where we started, as you get further down that rabbit hole, the parameters of what the ATO can do narrow. And for some businesses, like the ones that I've seen lately that have had those, they've been fortunate enough that we've been able to, they've had access to either funding or cash or assets to be able to get out of that. But many businesses don't. And the one I spoke to this morning is a really good example. That construction company, they can support a long-term payment plan. They can't support a short-term one, and they may end up back with the liquidators, but for the fact that we can fix it if we move quickly.
Yeah, absolutely. And I think there's a difference too between policy and legislation. So often what we see happening with the ATO policy wise is there is no legislation is law. So there's no legislation or no law around the time frame between when credit reporting is issued and whether a garnishee is issued and then a statutory demand is issued. And so the ATO's policy in regards to that might change every month or every week. But because our entire team are at the coalface, so they're seeing this all day, every day. We're at the front of that. I had a matter actually come in last Friday, which it had a bit of a hamburger with a lot. So it's got the garnishee, it's got the director penalty notice, and it's got the credit reporting. And so what I said to the client and what I said to the team, the next thing that I think on this one is going to be a statutory demand. So we literally need to jump on it straight away, which is exactly what we did. The day we were engaged, we were in contact with the ATO and we have jumped on that straight away. Now, 6 months ago, policy-wise and from our experience, we would have said, yeah, we've got a few weeks before a statutory demand is issued. Now, unlike this one, any day could potentially have a statutory demand issued. We need to move very, very quickly to prevent that, because the solution we can get for the client now is so much better and easier. We can still get a solution if a statutory demand was issued, but it puts a lot more cash flow pressure and a lot more pressure on that client, and it's dealing with it. So the difference for the client is dealing with it today instead of dealing with it in 2 months' time, but the difference for their business and the outcome we can get is huge.
Which leads us back to where we started, and that is that it's coming to the silly season. People are tired at the end of the year. Certainly, in some industries, it's when there's a lot of Christmas functions and so forth, and people are also thinking about holidays over the Christmas break. And that is the time to not ignore this stuff because of everything we've just said. What you don't want to do is go away on holidays with a solution potentially with the ATO and come back with a much worse solution, or for some businesses, no solution because they just can't meet the new parameters that the ATO are requiring because over the break they've been served with a statutory demand or a statement of claim, which, we know they continue. The ATO doesn't sleep. This work continues and this activity continues. So I know if it's me and I've got an ATO debt, I'd rather go on holidays knowing that it's sorted
Yeah.
than worrying about it, because people will worry about it. We know that when we talk to them. Get it sorted before you go, and then go and have a real holiday, knowing that everything's safe, that you're protected, that your business is protected, that your home is protected, and ultimately that your family's protected.
Yeah, absolutely. There's also another BAS coming up that's going to be due. A lot of people think, oh, well, if I'm in a payment plan and I don't lodge the BAS, then it won't default the payment plan. Or if I lodge it, but I just sort of ignore it, and I keep paying the payment plan. And as long as I pay the payment plan, but don't worry about the BAS, everything will be all right. But by not paying the BAS or not lodging the BAS, if you're in a payment plan now, that will automatically default the arrangement. So even
That's
if
it.
you keep paying what you'd already agreed to, which I hear all the time, no, but I'm still in the plan because I'm paying it, that
Mm.
then turns into a voluntary payment and you're no longer in a compliant payment plan. So again, people ignore it. They go, well, I can't. The ATO told me this was the last chance, or I've been told I'm not going to get another payment plan. But that's where we come in and where we can still help. So with this BAS, it's also super important if you can't pay it to get either into a new arrangement or if we have to renegotiate an old one, because that old one won't keep going and it won't keep you protected if you don't pay your BAS.
Yeah, and look, the ATO will work with us in this, and we do this every time, this time of year, every year. We have clients come to us and say, we're going into a quiet period. We're
Yeah.
going to struggle to meet that BAS. Can you do something about it? And we always say, absolutely. And as I said, if you ignore it and do nothing, it will default. But if you engage with the ATO, unless there's some, really, really poor compliance history and so forth, almost always the ATO will say, yes, we can vary the payments, we can renegotiate that, and we can do it all. And again, do it before the default happens and before you go on holidays so that you can relax.
And with the right information. So I think in the old days there used to also be a theory, oh well, I'll just get a payment plan. Every time there's a BAS due, I'll ring up, tell them roll the BAS in and then move on. The ATO have changed. That's another thing that I think has significantly changed. It's not just a matter of rolling a new BAS in every 3 months. Where absolutely they'll work with us with the right information, but it's a new application because that old payment arrangement has defaulted. It's a new payment plan, a new arrangement explaining why it's defaulted, why it won't happen again, and why they should effectively give you another chance to roll that BAS in.
Yeah, and I feel for a lot of accountants in this context because every accountant that I've spoken to has about half a dozen of clients like that who say, I can't pay it. Can you just go and
Just
sort this
make a
out and put
call.
it in?
Yeah.
Yeah, put it into a payment plan. It's easy. And they don't realize that it's actually really, it's not easy. And particularly if they have an existing payment plan or they've had some compliance issues with the ATO, it's not easy. And as I feel for them, and then they'll ring us and say, we've tried to do this and the ATO said no. And you're right, with the right information and positioned the right way, we can get there. But getting back to, again, something we've talked about, there is strict compliance with legal practice statements. This is not accounting work. It's never really been accounting work, but the poor accountants have had to deal with it. And they've been able to get away with it. Well, not get away with it, but they've been able to do it because of the way the ATO was pre. Now, the current ATO, which we talk about, is a very different beast.
And clients have, I think, difficult expectations. If it's been achieved before and they think it's a 5 minute job, they just want it done again within 5 minutes. And we know even in a lot of industries, but especially the accounting industry, getting staff has still been very difficult. So there's so many pressures on accountants as well at this time of year. So I think if we look at the update and a bit of state of play, now we're getting more referrals and more work to assist accountants in this space than we have in a very long time, just because of all the pressures that are on them at the moment.
Yeah, I think that's right, and certainly I think our stats show that the numbers have certainly gone up from the accountant referrers, and and it's tricky because it's not a 5 minute job. We know that, and because
Mm-hmm.
because our guys are on our guys are probably spending, and we're specialists in this area, but our guys are probably spending double the time that they would
Absolutely.
have traditionally. So we know that's the case, and I think the tricky thing for a lot of accountants is it not only is it not an easy thing, and yes, they're getting squeezed for resources, as you say, and yes, they're struggling to get new resources, but they also struggle to charge their clients for this work because the client says, well, isn't it just a 5 minute phone call? And it's really hard to be able to say, well, no, it wasn't. It actually took us 2 hours on the phone to the ATO, and we had to make a couple of calls because they came back asking for additional information. Yeah, we got there, but here's a bill for $600, and the client arcs up, or worse, we couldn't get there, and now you've got a direct penalty notice.
Yeah, absolutely. I think another thing too that's important is if the clients at this time of year, we know this is a really difficult time of year going into December and January, that if clients have been put in or got themselves into payment plans that they just don't feel are sustainable, to drip feed them out and go, oh, well, I can't afford the 5,000 a month, so I'm just going to give the ATO 1,000 a month, and that will stop any further action. To be proactive about that as well. And reach out. We do a lot of work renegotiating arrangements. And because we're very good at these long term, at these 3 year arrangements, that it is much better rather than to have recovery action. So again, if a client's drip feeding 1,000 a month instead of 5,000, that arrangement's defaulted. They're not protected. They're not in an arrangement anymore. And knowing where cash flow is going, knowing what's going to happen over the next sort of few months. We've got the BAS in November, another one in February. You've then got December, January, which is so patchy for cash flow that we can help there to renegotiate new arrangements to keep you protected over that period.
Yeah, it's good. And look, the other scenario we see is they're in a payment plan for $5,000 a month that was never affordable,
Yeah,
and they make the 5,000 payment, and then we get to the new year and they've got no money. They've got no money for the business.
absolutely.
They've got
Yeah.
no money for the next payment, which doesn't stop during Christmas with the ATO, and then they default it that way. Or worse, they just ignore it and think, I'll keep my head down and hopefully no one will notice we haven't made the next payment. And we know that the ATO's checking portals daily. It's not a human being anymore. It's all run by AI, and they are checking daily account balances where they need to be. And if they're not, the system automatically defaults it.
Well, we talk about ignoring, and I don't think it would be a proper podcast or any video without the frog. So I do have my frog here. Um, I think that's the biggest message from today. It's always our biggest message. Eat the frog, do the thing you don't want to do. There are solutions. There's so many more solutions if you deal with it early rather than ignore it. And we're here to help.
Really, really good summary. Look, that was quite a dense one today. There was a lot of information, and A, it's been a little while, but also B, there's been a lot going on with the ATO. So I'm really glad that we got that information out, and hopefully we can make a difference and help some people have much better holidays than they might have otherwise had.
Absolutely. Thanks, Michael.